Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. We welcome everyone here today. We got Robin, Two Phones, David, Eva, and many others. We welcome you on this Thanksgiving Eve. This kind of reminds me, I think it was like probably in 2016 or 17, I did an online workshop on Thanksgiving Eve, Christmas Eve, and New Year's Eve. And it was a wonderful way to spend time with our investing family. Thoroughly enjoyed it. And be nice to do it again. So just real quick, as we hop right in, today's topic, as usual, trading growth and value. Talk about what do we really mean by growth, but also what do we mean by value. Today, Long Snapper also wanted to include some income stocks. I'll talk about that in just momentarily. We're going to include some of those income stocks that have really been showing some growth characteristics as well, maybe also some value, okay? So we'll kind of talk about all three here today. Now, just real quick as we're getting started, remember with what we discuss, it's provided for general informational purposes only. Should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of research. Remember, in the online course for the fundamentals, it is about fundamentals, of course, but there is a technical component of that in the online course and in the sample plan. We use both, okay? Both fundamental and technical analysis. The paid money software application is for educational purposes only. Investing involves risk. Now, what I want to kind of do is kind of talk about when we bring up examples of growth, value, and income styles, we'll talk about that. We're going to spend some time at the beginning to talk about income first, okay? And then I'm going to get into Long Snapper's question, or as close as I can get to it. Also, what we're going to really be doing is looking to put on new sample trades with kind of some of the characteristics we're looking for. And then we're going to also take your questions on those as well. Now, we'll spend the time on the Thinkorswim platform and Schwab.com. Now, just a quick heads up, if you have not subscribed to the Trader Talks channel, make sure you do that. Just send this link out to you. Right in the middle of your page, what you're going to notice is, if you have not subscribed yet, you'll see where it says subscribe. This link right here is going to show us the link for this class. So if you said, like if you were catching up on certain videos, TiVo, whatever, at your house, these are going to be showing prior sessions that we had that you can go back and watch those. So quick heads up there. Now, first thing what I want to do before we talk about some income examples is I want to take a quick look at sectors, and this is really going to kind of set the table, so to say, as far as what we're going to bring up initially. So first off, here we have the sectors, okay, from tech, discretionaries, and so on. Well, if I look at this and said, hey, what type of trends do we really see here? Lots of those stocks being trend three. Trend three is just saying the stock is above both moving averages, not in an area of resistance yet. Trust but verify, okay, not a bad thing. What we're going to do is also, if we look at the 1 week performance, okay, to kind of see this, where's that momentum been going or the lack thereof, we really see that we have a pretty big push in healthcare, okay? We have a pretty strong push in real estate, which is where we're going to be focusing initially. We also see that financials and industrials, utilities, and basic materials. Now, if I bring up just quickly the IXU, that was a brand new high on the IXU, and what you're going to see is, well, that's like a W pattern off the bottom, but also a V pattern. Now, remember, when you talk about utility stocks, we're kind of thinking about something that would really be more income than maybe growth, okay? But some pretty strong moves there. When you look at, let's say, the real estate area, that index we're talking about, that also made a brand new high here today. Now, let me ask you a quick question, okay? We talked about growth. And when we say, for example, growth, okay, if you were to ask me, what do I think growth is? I'd tell you, okay? To me, growth is something more like when you get a sector, an industry group, or a stock that's growing faster than the basic economy and or the average of the industry group, okay? So when we're talking about growth, we're thinking about something that has year-over-year revenues and earnings per share numbers of 8% or higher. Most likely going to be double-digit on revenue and earnings per share. when we bring up terms like value, we're really saying that the stock and what the intrinsic value is, what that price would be probably within 10% of being, if we had a stock at, let's say the intrinsic value was 100, the price might be up to 110, or the price might be at, let's say 90, 91, anywhere in that 10% band of what the intrinsic value is. That's how I kind of be thinking about value. When we talk about income, let's kind of kick this off now. We're kind of thinking about something that might have some value and maybe some growth characteristics, but also the income component. Now, Long Snapper wanted to talk about MLPs. MLPs stand for Master Limited Partnerships, and there's a lot of similarities that are very close to ETFs. When we have things that is like ETFs, we do not record those, okay? And there's reasons for that. The quick answer is because. The long answer I could tell you, but it's not going to go anywhere as far as the discussion today, and it won't be recorded. So I'm Long Snapper. I'm going to get as close as I can. When I was preparing, I talked to a friend of mine, and he goes, he went down that path, can't talk about the MLPs. But I'm going to talk about real estate examples. And if you're talking about MLPs, you're probably talking about something that's income generating anyway. So let's kind of bring up some real estate examples that might be pretty close to the goal that you're talking about. Now, first off, if we look at, let's say, where can we find these, okay? So if I went to, let's say, Scan, okay? If I went to Scan just real quick, and I just want to show you this, and by the way, you could do this both ways. If I went to MarketWatch, if you're a visual person like most people are, we're going to go to MarketWatch and then visualize. If I went to the S&P 500, okay? Now, why the 500? It's going to give us a bigger list, okay? That real estate is going to be down here in the bottom right-hand side, real estate, okay? Now, James, I can't read something that small. Don't worry, you don't need to. I'm going to click on that drop down right there on the S&P 500. We're going to go down to where it says real estate. And if I click on real estate, now what you're going to notice is there's a list of stocks broken down by what type of industry groups they are. Healthcare, hotels and resorts, industrials, office, management, residential, retail, and specialized. Now, if you click on those, what you're going to notice is you click on them and it gives you the stocks that, for example, are in that space and then so on in this space, okay? Now, I'm going to kind of look at some examples that came from this list. And what I want to do is I want to kind of start talking about some of these stocks. What's the difference between real estate stocks and many other companies? Now, what I want to do is I want to pull up a stock to begin with called MAA. Now, let's say you said, James, I'm not really an investor that's trying to go for growth characteristics. Now, remember, growth characteristics would typically be something that's the company is not sharing any of the earnings or less, not really sharing that much of their earnings in the form of a dividend. Well, maybe you said, James, I don't work. I'm trying to get income. Well, many investors try to maybe look at MLPs, maybe also REITs, okay? We're going to focus on real estate because that's what I can focus on, okay? And if we look at, let's say this, what you're going to notice is mid-AMR apartment something communities. Now, if I went to the analyze and went to this, you're going to now see that it shows, what do we got here? Quality apartment communities, and they pretty much do it all over the place. Now, one of the other things is not only, for example, is it more income generating. So when we talk about REITs, they have to actually pay out 90-ish% of their earnings per share in the form of a dividend to investors, okay, for that company to receive, well, a waiver for taxes. Now, the biggest actually thing is what you're going to notice is when you zoom in on this, why does someone like something like this? Well, this is not really as cyclical, okay? I mean, you need a place to stay. And what you're going to notice is when we look at these numbers, 307, 219 in COVID year, bounce back hard in 21, harder again in 22, almost as hard as 22, 23, 471. And what you're going to notice when we look at these earnings per share numbers, they tend to be pretty consistent. Now, for many investors, they're saying, if I'm going to invest in something, I want something that has a greater statistical chance of being more consistent. If we bought Apple stock, the earnings could be really good this quarter or next, but maybe then all of a sudden those who bought, and then their earnings backs off, right? So the investor really wants something where the revenue is more consistent and the earnings per share has a greater chances of hitting the metrics. Now, what I'm going to do is if we go also to the trade tab, we pull up MAA, you're going to see that the yield is 3.56. Now, if you asked us and said, if it's an income stock, what type of yield do we really want to try to be looking for? At least to say it's probably more of an income stock. Answer, 3% or greater, okay? Now, you'd even like something that's maybe even paying a higher amount than the 10-year yield, okay, like 4% or higher. But right now in this one is 3.56. Now, don't worry, we're going to look at a couple of them, okay? Now, what I also want to do is let's go to the Schwab.com website, and let's kind of look around this a little bit, MAA. Now, if we look at MAA, what you're going to notice is we scroll down, and when I scroll down, what I'm going to do is just kind of come down here to where I can see some of the numbers over time. So if you're someone that says, James, I'm 60, 65, 70, I'm focusing not as much on growth or trying to find mispricing, if you will, for value, you're going to see that the dividends have been pretty consistent quarter over quarter, okay? When we look at the expected earnings, pretty consistent on the upcoming earnings. When we look at the estimate, okay, versus the actual, you see that really outside the last, 2 quarters, they were down, they missed, and they missed. They missed slightly. Q2 was down more. But overall, dividends actually stayed the same. Now, we can also see who are their peers in that space and how do they compare. Now, this is where if you said, look, I kind of like to focus a little bit also on growth as well, which companies kind of have that margin associated with it, okay? So keep an eye on that. Now, what I'm going to do is I'm going to go back to MAA for just a second. And what I'm going to do is we're going to bring up this stock, and I'm going to pull this stock up for our first example, okay? Now, if you also want to, and I can show you this, what I'm going to do is bring this back up. We're going to go to the very tippy top, Learn, and we're now going to go down to where it says Courses, okay? Right when we click on Learn and then Courses, what you're now going to see is when I click on Courses, right at the very top, second one from the very top, it will say Stock Investing with Fundamental Analysis, okay? So Learn, we're on Schwab.com, Learn, Courses. Now, if I go to, let's say, Learn Courses, what you're now going to notice is Stock Investing with Fundamental Analysis. I'm going to click on that. Now, once I do that, you're now going to see Introducing Fundamental Analysis. What are some of the investing styles? Principles of value, estimating intrinsic value. And now what you're going to see is it gets into, in step 4, Sample Fundamental Value Investing Plan. Now, I want you to also notice it talks about right there, sample entry rules, sample exit rules. So right there, we start getting into kind of like the timing of it. If you wanted to add the timing component with the fundamentals, make sure that you've gone through that course. Now, what I'm going to do in this case is we're going to do an example trade, okay? And if you looked at this chart, what type of price pattern do we really see? Well, we kind of have like a prior high. There's kind of like this V pattern off the bottom. We can even say that for a while there, we had like a low and then a lower low. But then we could also say, if we looked at kind of recently, you could say that this was a higher low. There's like 2 different W's off here. This on the right-hand side is more like a flag. And if we kind of looked at this, back this off for a second and say, this kind of looks more like a cup. The whole idea behind a cup is you're trying to also get something that might be a continuation pattern. So first off, what is it that the investor is trying to do? Well, number one, invest in a company that has greater consistency of revenue and earnings per share. Second, having the company share those earnings in the form of a dividend. They could change the dividend, they could cut the dividend, they could keep the dividend the same. You just need to realize that's not set in stone to infinity, right? Now, if we look at this, we're also going to kind of be thinking is, when is that next dividend? Okay, so if that focus was you. Now remember, if you're trying to say, I want to focus on MLPs, or I'm going to focus on stocks that have income, look, yield is yield, okay? Yield is yield. So if we look at this, when was the last ex-dividend date? Well, the last ex-dividend date was 10/14. And if you look at 10/14, the next one, let's see, 11, 12, it's probably going to be around January 14th. So that dividend is not coming immediately, okay? But what I'm going to do is kind of with that in mind, I just at least want to know when's the timing of it. Now, when I bring back, when I look at this example trade, I'm going to pull it up. And what we have here is I'm going to right click on the chart. Okay, right click. Now we're going to go to buy custom with OCO bracket. Now what I'm going to do is, you don't have to, but if we said, look, we want to set a target, okay? Now remember, number one goal is income. Number two is price appreciation. Which one comes first? I don't know. We're going to try to find out. But if I look at this, kind of the width here of this cut from top to bottom, 165 down to, let's say, 151. Now, what you're now going to notice is if we add $14 on the top of this, add 14, we add 14, it's going to be right about let's say 179 and change. Now, wonder if the stock goes to the target and then, for example, it doesn't hit, it doesn't go to the mid-January where there's also a dividend as well. I mean, maybe the investor might look at the gains they had in the stock and feel grateful. Okay, that might be a good way to look at it. Now, if the investor is investing for income, they might not set a target. But if that price target there is for them, or they want to use that, we are going to set that target there. The stop, what we're going to do is set the stop right underneath this area right there, which is where the moving average crossover was. And again, this goes back to, if you're trying to invest for income, you're not trying to get out and lock in losses on stop losses. So you're going to tend to be a little bit more generous on how much you're willing to give the stock to go down. That will also probably mean that you might have a smaller position size as well. So 157.29, there's the stop, dated GTC. So trade number one here is we're going to pick one of these real estate stocks that has really kind of been quite bullish, had a little pullback as of lately. Now remember, in our term, when we talk about entry, we're going to count to three, okay? One is when the 10-period moving average goes green, which is the foundation for almost all of our trade examples. Is the price above the 10? Two, okay, is when the 20-period moving average goes green. It did. And then third, the moving average crossover. The difference between 1, 2, 3 is just more confirmation. That's the difference. Now, what I'm going to do is going to confirm and send and hope this doesn't reject it. Okay. Now, remember, with the stop order, there's no guarantee the execution price. What the stop fills at will be near or equal to or near the activation price. Going to send the order. And now what's happening is that order is just sitting right there. So let's kind of think about something just real quick. Why does the investor want to deepen their knowledge and broaden their understanding of different investing styles? Well, sometimes growth stocks do really well, but they tend to do well when the VIX is high and falling down. Okay? And there's going to be some investors that are just interested in those type of stocks naturally, but that's when growth stocks tend to do quite well. Value, you're going to tend to see value is going to be probably, again, there's always going to be some pockets of investors. They're always interested in value. But value tends to do quite well, probably when the VIX is in the mid-range to falling as well, but probably also at the same time when the VIX is low, then maybe starting to diverge. Now, let me kind of show you something just real quick. When we talk about income stocks, okay? So when we talk about income stocks, the income stocks tend to have stronger trends when the VIX is low and diverging. Ladies and gentlemen, boys and girls, okay? You're going to see that when we look at the MACD on the bottom, one, and you look at where we are now, the price has yet to make a lower low. The MACD is shallower than what we see before. Now, James, why are you bringing up income today? Well, number one is whether we talk about growth, value, or income, we kind of want to know what pockets or styles might do better given where the market is. If the VIX is low and diverging and we were kind of speculating, which is not a four-letter word, I mean, spell it out. The biggest actually thing is the income style tends to do better. What's income? It could be real estate. It could be utilities. It could be healthcare, non-biotech. And it also could be staples as well. Now, I want us to keep an eye on this, that if this starts to kind of turn back up, volatility actually comes back to the upside potentially, keep an eye on those utility staples, real estate, and healthcare, non-biotech. Those might outperform the growth and the value, okay? Now, this is not our first time seeing this situation. If it plays out like it has historically, maybe income does quite well again. Now, what I'm going to do is I'm also going to come back to a different area for just a moment, okay? So we did real estate stock to begin with, and then I want to come back to a staple stock, okay? Now, if you look at, let's say, PM, we've been watching PM because its twin brother called Altria has been a horse to the upside. And it kind of also had that prior high, falling back down, ran back up, shallow pullback, and then shot to the upside. Now, sometimes some stocks in the same industry group might have not had that same move yet. So when you look at this on PM, we'll look at the fundamentals in just a moment. Horizontal support, higher horizontal support, and you're going to see another higher low area as far as the support. Now, who cares? Well, if we're making higher lows from here to there and there, then what it's doing is putting pressure on the resistance. Now, when we go back and look at PM and we kind of say, what do we have in terms of the yield here? Well, yield is at 4.10. Now you got to remember, some investors are not investing for income or yield. They want speculation. They want a direction, okay? Some other investors like Long Snapper, EVA included, okay? They might say, James, I have the capital. I want the capital, though, to work for me to get the yield. That's the first goal. The second part of this is capital appreciation. Now, probably say this backwards. Number one is capital preservation. Number two is really more about income. And number three is really about capital appreciation. Okay? Now, it's always about protecting the capital. Now, here's the deal. When we actually go back and look at, let's say, PM itself, let's kind of look at these fundamentals, kind of see where it stands. Now, if we're really kind of seeing that something that has consistency, let's scroll this back down. Well, you're now going to kind of see, and we'll kind of take this a little further, dividend going up a little bit over time. 135 in this last quarter, okay? We see when the previous X date is, okay? So we're talking about October, November, December. This one coming closer than our first example, okay? Annual dividend yield, 4%. And when you look at the expected earnings, now why does this matter? Well, because if they have, let's say, earnings that really meet expectation, they actually might be willing to maybe raise the dividend, okay? Now, these are just the estimates. They don't know if it's going to hit it, okay? But it's not a bad sign to see that kind of stair-stepping to the upside. When you look at these numbers, they missed, they beat, and they beat. And they beat by 9 cents, 2 cents, and the last one about 9 cents. For me, okay, always like to see a company that's willing to show a bigger beat because they're just kind of being, they're not just managing the expectation. They're showing, hey, we perform quite well and are willing to show that in the actual results. Like to see that, okay? Now, when we actually come down and take a look at this for just a moment, of the 5, there's only 2 companies here that even have a PE. Now, what's amazing is people will say things like the market is so expensive, the market is so expensive. Well, you can't say that to everything, okay? Price to earnings of actually Altria is at 9, okay? Let's just go 10. The PE of actually Philip Morris is at 20. Now, when we go back and really take a look at this, when we look at things like an income statement, okay? When you look at the revenue, 2019, over here on the right-hand side, 29. Now, this is in millions, okay? And so 1,000 would be a billion. They were at 29 billion, 28.6 billion, 31 billion, 31.7, 35 billion, 35.2 billion. Okay, so revenue actually increasing. And when you look on the bottom, the net income, you're going to see that that is actually not the highest it's been, but it's still pretty high, pretty positive. But kind of looking at over time, it's kind of flatlined somewhat on net income. So in other words, how profitable they are. Okay. Now, if we take a look at this, what I'm going to do is going to go back, and we're going to do this in one of two ways. Number one is we're going to try to buy some underneath the resistance level. Okay. Now, the first thing that we're going to do is going to come in, and let's say we did this with, let's say, $5,000. Okay. We're going to put $5,000. Let's imagine that our position size was $10,000. Well, if we did half that, $5,000. So why is a paper money account trying to buy some when the price has not breached resistance? It's a clear answer. Trying to buy a little bit closer to support. How do you know the stock is going to go up? You're never going to know that. You want it to go up, but you don't know if it's going to. Now, we're going to set a stop underneath 129. Now, if we looked at this and kind of said something and went back to these numbers for just a moment, if we said on this chart, is this something that's really showing growth? I can't say that, okay? Now, what I look at is I look at kind of the number, 35,254. That's where it is now. And you look at this number right here, 29,805. I'm just looking at that far right-hand side. And just on a little calculator, I'm just doing 1/5. And that's going to give us the average growth rate over time. Speaking of that, let's do that. So if I take 35,254 over 29,805, you're going to see that we get that number. What's 1/5? Well, it's 0.20. Okay. So if I bring this back up and I look at this and said, what is the growth rate on this company over time? Easy answer, 3.4% arithmetically. That's it. So if I looked at these numbers and said from there to here to here to here to here, how much is it growing? This number is right here. There. That number is where we started 5 years ago. Okay. That's why we went 1/5. What's a fraction of 1/5, right? Or in a decimal form, 0.20. And so we cannot say that this is a growth name. When we look at also, we won't even have to go down to the net income because it's going to it's going to be a little bit better, but not massively, not over 10%. Okay. So when we look at this number of 3.4%, this is kind of more like the income, and this is pretty standard. So you have to know that one of the risks of income is if this revenue drops, the net income drops, where's the dividend coming from? How are they going to pay you if there's no money in the drawers? So that's kind of the risk. If the company is not growing at all, where does the money from the dividend come from without constraining the company financially? Does that make sense? I mean, if they're going to pay a dividend, they need money to pay the dividend. Okay. So now what I'm going to do is, so now that we looked at that number, and I'm going to show you some other ones that are going to be, that are probably stronger examples. We're going to set the stop. Where was that stop? It was at 126.42. So 126.42. Confirm and send. And now what we have is we're going to buy the first lot of PM looking for a breakout. Read what's in red. If that's fine with you, we're going to go ahead and send that order. Now I'll fix that. And then what we're going to do is we're going to right click on the chart. We're going to, guess what we're going to do? We're going to create an alert. Now remember, there's lots of good intentions. We had intentions to buy it, but we forgot, okay? We're going to create an alert. And we're just saying here, if the stock gets at or above 133 and change, let us know. And what we're going to do is we're going to say add other half of position. Okay. Now what we're going to do is going to go down to create, and that's just sitting right there. Now, what I want to do is want to kind of go back to something just real quick. I'm going to go back to just really quick. I'm going to bring up something that might be more growth orientation here, okay? Now, we got PayPal, okay? Now, if you look at, let's say, PayPal, and what I'm trying to really do is kind of show you some variation. Now, if I brought up this stock, PYPL, brought it up, there it is, scroll down, and what I really want to kind of see is the numbers down here. And we're going to go down to the income statement to kind of see what they got. So first off, you could kind of eyeball this and kind of say, does that look more like growth? Well, all I'm going to do is I'm going to take this number on top over that number on the bottom. And we're going to do the same math, okay? So if I did, let's say 29, now remember, 29,771 is really 29 billion, okay? So 1,000, okay, 1,000 would be $1 billion. So 29,000 is 29 billion. And this is for what? That's for the whole entire year. It's not Apple, okay, but it's not chump change either. Now, if we did this, what I'm going to do is let's kind of just double check these numbers. And what you're now going to notice is it's growing at 10.8%. So that revenue growth, doing the same math as we did before, that's kind of something that we would be thinking. Now, when you look at the net income, okay, going from right to left, we also see that number also pretty high as well. Okay, and if I did the same math, what you're now going to see is that net income, it's about 11.5%. If you're a growth investor, you like that double digit percentage gain on revenue and net income. So it's not that they're just creating a ton of revenue, but they're bringing it down to the net income. They're not spending all the money, okay? They're bringing it down to savings and then stashing it away on the balance sheet. And it becomes that current asset or any future asset that they might actually have kind of for longer term type assets. So not a bad thing. So what I want to do is I just want to kind of show a comparison there. Now, I'm not going to do the example on PayPal, but what you're going to notice is a very strong run up and a pullback and a little run and a slight pullback sitting right on the moving averages. Now, what I want to do is I want to kind of go back, but I just want to show some variation, okay? Now, if you look at an example given, let's go back to something like, okay, CPT. Now, CPT, Camden Property, kind of looks like, now, what's a little unusual about this is you kind of had something where it had a prior double high there, and then it dropped way down. Now, we spent some time kind of talking about this, okay, where if you get the stock to fall down below support and then quickly come back up, what type of pattern do we call that? That's a V pattern, okay? Now, if you can, for example, get that stock to go back up, it makes a high. What's the highest likelihood? That you make a higher low. And that higher low, for example, if it comes back to where the old support area was, that old support level again is retested and we bounce. And then now what you see is we just made another new high again. So here's the deal. Once you make a higher high, what's the highest likelihood? To make a higher low. If you make a higher high and you make a higher low, that is called an upward trend. Okay? Now it sounds so simple, but the reality is you don't really know it truly until you practice trade it and you do it for years. Okay? Don't say you did it for 2 months and you get it. No, there's no way. Okay? It doesn't sink in that fast. Okay? Now what I'm going to do is, what you're going to notice on this chart is we're kind of right there at the area of resistance. I also want you to notice something we're seeing on the MACD. The MACD has been staying pretty high. It's the highest we've been in months. Now, if I said to you, well, why does that even matter? Well, if the MACD is staying that high and we're kind of up near the area of resistance, this might be something. If we have this type of momentum on the bottom, could it have a greater chance to maybe take out that upside resistance area? That's the idea. Now, let's say you said, well, James, my number one goal is capital preservation. I got to know that there's a real legit business here. I mean, is this kind of like something where I buy the car, open up the hood, and there's nothing in here? Well, let's go check it out. Now, I'm going to tell you right now, that might seem such like a foolish thing, but if you ask most people how much money did the company make, they wouldn't have a clue. They wouldn't have a clue. Okay? Now, here's the deal. We want to go down and say, okay, what do we got? Dividends, big bump to about the 103. Okay, when we look at expected earnings, pretty stagnant, but consistent. We look at the historical, they had abnormal earnings right there. We need to kind of find out what kind of caused that. They took a realized gain that massively influenced what they did in Q4 23, but the rest of it has kind of been more in line. Now, sometimes you can just get the company where they might have something where they had an investment, they realized a gain, and then it went to the income statement. It's more of a one-off versus something that's more like cash flow from operations. Cash flow from operations is kind of when you have this, but when you dispose of an investment or some finance or anything like that, you can have one-off items that spike losses or gains like we see here. This was a gain. Now, when we go down to the bottom, what you're going to really notice is these numbers, the PE is actually 40. So one of kind of the concerns a little bit is, this is up to the investor, you just got to understand that this stock is kind of trading at a higher multiple. Now, if you have a higher multiple and the company starts to miss on the earnings, some of the stocks that actually have a higher multiple might be at risk. Lastly, when we come really down to this, which we have not spoken about, but I'll kind of make mention, here we're looking at the balance sheet. When you look at this balance sheet and to the right, to the left now, going from right to left, that balance sheet is up probably about 40% or so. Not a bad thing. The question is, can they take those assets and turn them into money? So it's possible that you sit on your assets and then don't convert it to money. You don't make money. You don't make yield on the money. You don't make dividend on the money. You don't use it maybe for fixed income or stock dividends. You don't use it for price appreciation. So having assets isn't necessarily the whole thing. It's how are you using those assets to make money? Now, let's go to just real quick on this. Let's look and see if they are doing that. Now, if you look at this and kind of say, what do we have here? Total revenue. Now, if we said, what do we notice? Well, you went from, so by the way, when you say 1,542, we're really saying 1.5 billion, okay? So not as big as some of these other companies we looked at. Now, when we look at that number, it's about 50% growth, and it is 50% growth. I'm just double checking. If we look at kind of, we're talking about 50% from jump to jump, okay? If we're talking about on a year over year basis, it's right around 8.4%. Remember when we said we like to see something at least 8% year over year? It is. We like 8%. This is 8.4. But when you look at from 19 to 23, it's about 50%, just kind of taking a quick look at it. Now, when you look at the net income, they're not lightweights either. 220 million to 403 million. And that's not quite 100%, but not that far off either. So the assets they actually have bigger, more assets. They're taking those assets and they're bringing it to the revenue line. Now, to the investor, that's like music to their ears. Keep singing, okay? And then when you say that you not only make the money, but you bring it down to net income. Why does that matter for EVA? Why does that matter for Long Snapper? Well, because this net income is what is helping pay the dividend, okay? So that's huge. If that number continues to grow, they might be willing to share more of that net income in the form of a dividend. And if you get lucky, they even might pay out what's called a special dividend, like a cash dividend, maybe something like that. Can't count on that. But if that were to happen, be amazing. Okay. Now, if we take a look, now, by the way, what's one of the risks of like a company that pays out a lot of dividends? If the company doesn't actually watch their cash levels, they might have to do what's called a secondary offering. They sell shares to reliquify their balance sheet to like have them be able to maintain their business. So that's the risk, is when the company pays out so much in the form of a dividend, they might have a very thin capital to run their business, because they're sharing a lot of that income, net income, back in the form of a dividend. Okay, so that's kind of the bad part about just paying dividends. The company might not be adequately capitalized to take advantage of opportunities out there to buy other companies and do other things with their own business. Now, what you're going to notice is when we look at the yield, it's 3.24. It's over 3, but it's not like some of these other stocks that are like 5, 6% and so on. Last example that we're going to look at here when I pull this back up is if you pull this back up on CPT, what we're going to do in this case is we're going to bring this back up. And we didn't have that order there, but what I'm going to do is I'm going to right click on the chart. Now, sometimes investors say, James, I don't like to buy at brand new highs. I would just gently push back and say, when you married your wife or your husband, you know where I'm going with this, you married them at all-time highs. Okay? And if you said, I'm not sure about that, did your spouse marry you at all-time highs? I've never had anyone say, no, I was at 52-week lows when my spouse married me. Okay. Some of you, you might say, James, I want to think about that before I give my final answer. Hopefully it's what we said first. Now, what you're going to notice is we're going to set a stop underneath the moving average. That moving average, 123, okay, 64, less 2%. And if we did that, it's going to be 121.16. Now, if we take a look at this, stop day to GTC. Now, example number one that we actually did was MAA, okay? MAA. Now, we also, for example, on this CPT, that was the second example. It was actually, for us, it was the third example. The second example was PM. Now, on this example of CPT, like the PM example, we're going to buy half the trade now up near this area of resistance. And what we're going to do in this case is we're going to confirm and send. Notice that we actually have that pending right there. Read what's in red. And what we're going to do, and just so it doesn't, I might be running out of money in that IRA account, which is usually the case. And now what I'm going to do is I'm going to put that right there. Now, so we don't forget, we're going to right click right above today's high. We're going to create an alert. And what I'm going to do is when I go create an alert, I'm going to just put an alert right above today's high. Now, I have a specific homework assignment for you, okay? And that homework assignment for you is I want you to look for companies where the balance sheet, the assets over time, they're increasing. Remember, we would like to see these numbers growing at 8% or more year over year. Second part of this, we don't want just the assets growing. We want, for example, the company to, for example, make money on those assets and have that revenue growing at least 8% year over year and on the net income as well. If you find those, I'd like you to paper trade those and see if you're not seeing technical setups on those charts, because what's happening is investors that can read the numbers, not just the charts, they're saying the management, the business itself, the management of the business is actually effectively turning the company's assets into cash. And that's what many investors like, because that cash could be maybe capital appreciation, but also paid back in the form of a dividend. That's what I want you to focus on. Find companies that are growing on their balance sheet, on their assets, turning those assets into income, okay? Not only revenue, but also net income as well. We did 3 paper trade examples. And so we try to really focus more on income stocks, but also show you a little blend of PayPal with growth as well to kind of show you how the numbers could look drastically different if you're talking about something that really has growth. Now, remember, if you have not subscribed to the Trader Talks channel right on YouTube, okay? Yeah, so long snapper, if we talk about what you're asking, it is not recorded. So if I have 1,000 people to watch the recording, there's not going to be a recording, okay? So I went down that path. I looked into it for you. If I talk about that subject, the whole class is not recorded. And so that would be very sad for many people out there. So what I did second best, okay, is I said, hey, what are other income examples? I mean, yield is yield, okay? Trend is trend, whether it's coming from energy or utilities, or whether it's coming from, let's say, staples or these areas. We're doing the best we can with what we can cover and getting it recorded for many other investors that want to see examples as well. So that's why we did what we did. All right. So with that said, I want to also wish you a happy Thanksgiving, okay? And enjoy it with your family and friends and your pets, okay? Jax will be sitting right at the head of the table. And yes, he'll be wearing his tie. So with that said, I want to thank you so much for your comments and your participation. And we did 3 trade examples talking here about trading growth value, and I included income stocks, and I talked about why. I'll be back on Friday, right in the morning with Kevin Horner. With that said, have happy Thanksgiving. Take care. Bye-bye.